second time this year. Our next guest is buying some more after cutting back a day before the investor day. Tesla shareholder, future fund managing partner Gary Black joins us today. Gary, great to have you back.
Carl.
We haven't had a chance to discuss investor day and sort of that cloud of so-called disappointment that the market at least seemed to reflect. What did you think was at work then, and what do you make of the price cuts today?
I would say the more you watch the video on Investor Day, the more bullish you get. I think the market, it was definitely going to be a sell on the news event because the stock was up 100% in the 2 months before Investor Day. So obviously some people taking profits. And I'd say it was just, long on aspiration, short on tangibility. And I think, there were a lot of people that were playing the stock that were waiting for a big unveil of something. We didn't expect an unveil because, as you remember with Model Y, you don't want to get too far in front of an unveil because then you get, as we call an Osborne effect on the existing products, right? Everybody's going to wait for the new product. They're not going to buy the existing product. So no, we didn't expect an unveil, but I guess some people did. I think the positives from Investor Day, and again, watch the 4-hour video, including Q&A, you can't help but be bullish. They reiterated a target of 20 million deliveries by 2030. That would be 24% share of the market. They'd be by far the biggest auto manufacturer if they get. Now that's aspirational, but they gave you a roadmap of how to think about, and this is the second point, how they could cut costs by 50%, which allows them to go into the mass market, which is about 50% of the market. And they took you through looking at powertrain cuts, battery cuts, general assembly cuts. They announced that day that they were going to open up a new plant in Nuevo Leon, Mexico, where the labor costs are cheap, and they could take full advantage of the $7,500 IRA credit, and they could export into Brazil and other Latin American countries where Mexico has tariff treaties. So I came away extremely bullish. I felt that, the breadth, one of the concerns I've always had is, it's an Elon Musk company, but you saw there must have been 15, 18 people up on the stage that gave you a lot of confidence that there was a really broad, in-depth management team if Elon were to ever disappear, not that he's going anywhere. Other positives, Cybertruck is coming this year. Cybertruck's going to be huge. There's 1.3 million pre-orders. I think the street next year for 2024 is about 90,000. If they actually get this thing launched this year, which I think the confidence level should be high now. If they could do even 200,000 deliveries next year with Cybertruck, that's worth about 40 cents a share. And in the whole energy side business, nobody pays attention to it. They have this new facility that came on the third quarter in Lathrop, California. They can do about 10,000 megapacks per year. These things sell. They just raised price over the weekend. Again, there's a 2-year backlog. If they could sell even 10,000 of those at, let's call it $2.5 million each, which is what they go for, that's worth about another 50 cents a share. And so that's $1 a share more than the street is putting into their models today. And that's why we're still pretty bullish on the stock. And that's why we bought when the market, punished it after Investor Day.
Gary, that was quite a litany of positives, and you didn't even mention humanoid robots. I mean, he thinks there's going to be a 1-to-1 ratio of humanoid robots. You don't see that as an opportunity?
One of the interesting things that I found is what Elon didn't emphasize. He didn't emphasize robotaxi, which we've never been a big fan of including robotaxi in our evaluation. If it happens, great. But we build in FSD. It's a driver assist product. It's a level 2 autonomy product, at $15,000 per. And, that goes in at about a 10% take rate. We've never built in any valuation in our $370 price target for robotaxi. And I would use the same, concept for bots, for robots. If they get there, that's great, but I'm not going to build in any valuation because I don't know what its point of difference is going to be versus the other robots out there. So when we think about Tesla, we go out to 2030. We don't use 20 million units. We use 10 million units. And this is, again, if you want to get comfort with valuation, we use 10 million units. We assume EV adoption will be about 60%. Today it's 10. And if you look at Europe and China, EV adoption is going through the roof. The IRA, the $7,500 credit, will cause the US to go through the roof. So we take 60% EV adoption. We assume, and this is not a grand assumption, Tesla can hold its current 20% EV share because they got Cybertruck coming and they're going into the mass market with this $25,000 platform, which is not just a compact. It's going to be a baby SUV. It's going to be robotaxi if it shows up. It could be a van. There's a whole bunch of products that are going to come in this $25,000 segment. So 60% EV adoption times 20% EV share, that's 12% share of the market. Global SAR, the selling rate for the auto industry is about 85 million. That's about 10 million units. That would put it at the very top today. That's where Toyota is, and they're number one. And here's the punchline: at 10 million deliveries at an average selling price below 50, because you're going to have to take it down when you go into this $25,000 segment, we're coming up with about $30 in earnings per share. We would put about a 30 PE on it, 1.5 times growth going forward from there. That gives you $900 in valuation using a 4% 10-year treasury, 13.6% equity discount. We get about $370, and that excludes robots, right? So to me, if they hit 20 million vehicles, you could double that number.
Gary.
But we're not there. Hey, Sarah.
Gary, if demand is so strong, why are they cutting prices for the second time? Wouldn't a company want to take advantage of their pricing power? Kathy Wood pushed back on me on this point as well and said they're doing it because they can, and they're trying to unlock the value and open up the size of the audience. But usually when companies cut prices, it's to boost demand.
It's a fair question. I would say Elon's been very consistent that everybody wants a Tesla, but not everybody can afford a Tesla. I agree 100%. Now, here's what's interesting about
That's what they said about Peloton.
This is not Peloton. Peloton, anybody can replicate a Peloton. I go to the gym every day, and I'm riding
obviously,
things.
I'm just making that point. We've seen this in corporate America.
Okay, but here's my point on SNX. Okay, so SNX is less than 5% of their volume. It's at the high end. And when you got that cap, remember with the IRA cap, it went from a $55,000 cap to an $80,000 cap. That was back in early February. The Biden administration clarified it. Model Y suddenly became $7,500 cheaper than Model S and X. And that's where it's going to draw from. And so I think they're just trying to adjust their prices. Again, it's less than 5% of their volume for this year to get it right so that S and X can grow going forward. The second point is on Europe. And a lot of people are making a big deal of this, which I just find it crazy. Europe, they're putting a 6% discount on their inventory volume, which means it's just a first quarter adjustment. Europe's about 20% of Tesla volume. So I can't really look at that as a price cut so much as a quarter end discount to clear out excess inventory. And then I just want to make one last point. So a lot of people give me grief and they say, well, you're using 10 million units on Tesla. And my ex-colleague, Tony Sakinaki, as you know, is a longtime bear, who I have a lot of respect for, will say, hey, Corolla and RAV4 today are only selling 1.1 million units each, and they're the top selling products in America. How do you get 10 million units? And so I go back to this next gen platform, which allows Tesla for the first time to go into the mass market. They'll have a compact car. They'll probably have a baby SUV. And if robotaxi becomes available, that would go in there. That's probably about 50% of it. And then Model Y is on its way to becoming the best-selling car in the world, probably next year. That'll probably be about 1.6 million. Cybertruck will probably be at about 1.5 million. You can add up by product. And again, Tesla didn't do that. But if you did that, you can get to 10 million units pretty easily.
Gary, you know, I want to end with this. Every time you come on, you got a few people who don't like you on Twitter. I'm not going to go into any details other than say, listen, they point out your performance of the future fund since you began the ETF. And it's a very small ETF. I guess in August of 21 is what, down 20%. I mean, how do you answer those who are frustrated with your performance so far since you started this thing?
Look, year to date, we're second percentile, meaning 2 out of 100. This is a growth environment. We launched, unfortunately, right before the Fed started raising rates. And as you guys know, when rates go up, growth stocks get hurt. They're long duration, and Tesla's a long duration stock. And so we were unfortunate. We launched right as the Fed started raising rates. We had a poor 2022, and so did a lot of other growth managers. I know ARK was in the 100th percentile last year. We were kind of in the 70th. But our fund is doing what you'd expect it to do in a positive growth environment where people are talking about the Fed pivoting later this year. Whether they do or not is a whole different story. But in an environment that is more stable rates, we should be able to do what we're doing this year. I'm not saying we're going to be second percentile all the time, but we should be able to do quite well for our investors in a normal growth environment. And I would just argue you have to compare us to other growth ETFs, not to core ETFs, because we own a lot of growth stocks. And then when rates go up, mathematically, growth stocks are going to go down.
Gary, appreciate that. Good to see you, and I'm sure we'll be talking again in the days to come on Tesla and other matters. Thanks very much.
Thanks, guys. Bye.
Solid gains for Apple so far this year, and Goldman is forecasting double-digit upside ahead. We're going to break down the call, which is moving the market. The Dow's up 130, and Apple is contributing the most, adding 26 points to that Dow rally. Squawk on the Street. We'll be right back.